Good afternoon, this is Matthew Lindsay with Precision Home Group here in Anchorage, Alaska. Coming to you live today to talk to you about loans. This whole week we're going to spend it on loans. We're going to talk about financing as it pertains to real estate. Now everybody uses loans, everyone uses financing for most of their big purchases, whether that's real estate, cars. I've even heard people financing laptops, electronics, and things like that. So we all use it. But are we using the right option for us, or are you just going to whatever option A pops up, the first option possible? So we're going to be talking about that this week. Everything from FHA loans, conventional loans, VA loans. We're going to be talking about other options as well. Now, before I get started, I'm not a loan officer. I am not a loan officer, so let me just get that out there. We're going to be going over generalized ideas, some of the general outlines, some of the general things that you should know about the different loans that maybe you could ask your loan professional about. So we're going to start today with FHA loans. FHA loans are a great option for a lot of first-time home buyers, a lot of buyers who have already purchased in the past that don't currently have an FHA loan. We're going to get into the pros and cons of that, but real basic FHA loan is sold because it has a very low down payment. We're talking 3.5%. So VA loans, they have 0% down payments for people who qualify for the VA loans. So the next best is that 3.5% down. That's why a lot of people go after them. You're not putting 10, 15, or 20% down. It's a lower barrier to entry into a home. You could purchase a single family home, you could purchase a condo, you could purchase any type of residential multifamily. So that's anything from a duplex, triplex, and fourplex with the VA or with the FHA loan. You could also do that with VA. So that's what people are getting these for. What is it? The FHA stands for the Federal Housing Administration. It's the federal government backing the loan itself. So when a local lender, a bank, a credit union, Wells Fargo, Alaska USA, some of these different lenders here in town or brokers sell these loans or write these loans, it's backed by the federal government. So if you quit paying that, the federal government is going to start paying that, and it's backed by them. It's federally insured. That is what the FHA stands for. So that's what the FHA loan is. Now some pros of it, like we said, is that small down payment. A lot of people don't have a lot of money in savings. They don't have a lot of money to put down on a home and cover closing costs if they need to. So it's a lower barrier of entry and allows people to get inside of a home with a low down. There's also no prepayment penalty on a lot of these loans. Also, a lot of these FHA programs, not a lot, but some of them, allow for a rehab loan. So if I find a home in my area that is maybe needs some work, needs some updates in the home itself, I can actually go in with the right program, with the right lender. Again, talk to your lender. You can go in and get a rehab loan, a FHA small down payment, where that loan amount is actually greater than the property itself, because now you're going in and putting a little bit of extra money into that home, greater than the purchase price, so you can take that money out and pay a contractor to actually do some of the work in the home to bring it back up to where it should be. You can have a lower credit score for FHA loans than a lot of these other conventional loans. So that is also a benefit as well. And then the debt to income on some of these is usually going to be about 30 to 31, somewhere around there. So if you're, bringing in $3,500 a month, expect your payments to be, about $1,200 or less. That's kind of the limit there. But again, not a loan officer. Talk to your loan officer about that. Some of the cons for the FHA loan. Price cap is set by the HUD in your area. HUD is another organization built by it's a government organization, and it's a housing organization. So they are going to set the cap on what you can purchase with a FHA loan. There is a cap. You're getting that low down payment, but they want to make sure that you're not utilizing that and buying $1 million property, right? So there are different limits for different types of properties. If it's a single family home or a condo, it's going to have a smaller cap. If it's a duplex, maybe a little bit bigger cap, all the way up to fourplex, and it's staggered up for that cap price. Mortgage insurance. This is a big portion of the payment that a lot of people don't realize. When they look at payment calculators online, these calculators don't always calculate for the mortgage insurance. They're just doing principal and they're just doing interest. So when they're amortized, they don't take that into account. The mortgage insurance is pretty much the buyer ensuring that they're going to pay. It's an extra payment that actually goes to FHA if by chance that loan goes into default and the government has to start paying that loan. There's some different cons is that there's a lot better choices out there for some loan types, conventional VA, other types of loans. There's a lot of different smaller specialty type loan packages out there. So I highly recommend talking to your lender, talking to a couple different lenders if you need to, about what loan type best fits your needs. The other con of FHA loan, in my opinion, if you're trying to get into a multifamily, some type of residential multifamily, the duplex, triplex, or fourplex, is you're going to be over leveraged. So if you're going to go in there for a multifamily, you do also have to live in that building, in that property, in that home for the first year to own or occupy it. So with that being said, you're taking up a unit and you're over leveraging yourself because you're putting only 3.5% down payment. And you're losing a unit's rent if you're not paying yourself rent in these multifamily. So some pros, some cons for you. We'll go through the rest of these loan types throughout the week, so stay tuned. If you have any questions, love to hear them. We're always here for you. Give me a call, give me a text, 907-302-1011. Thanks.